right. Welcome to Willow Legal Group's Coffee Chat. Today we have Chris Genovese. He is a mortgage loan officer. Thank you for joining us, Chris.
Thank you for having me. Can you hear me okay?
I can. We can see you too. So Chris is a Washington, D.C. native. He has been in Frederick, though, for more than 20 years. He met his wife, Christy, in 1993 and got married in 2000. They have three wonderful children who I have met, and I can concur, Anthony, Marissa, and Isabella. And Chris is really passionate about serving all people. Chris started his career in finance back in 1997 with Chevy Chase Bank. He has over 20 years experience in lending, and he's helped clients from all states on the East Coast, but the primary focus right now is Maryland, Pennsylvania, and Virginia. So Chris's goal is to help improve his clients' lives by supporting them through the home buying process. So one of the things we love about Chris is his personal touch. He is going to be with you the entire step of the entire process, every step of the way. And he doesn't just pass you off to somebody else. If you have a question, he's going to be the one that you talk to. And he's also very blunt. He's going to tell you, tell it to you like it is, which his clients appreciate, because nobody wants to be sold a whole bunch of crap just, to make the sale. So one of the things that's awesome about Chris, though, is his relationship focus. And that's why he's one of my friends and one of our go-tos when it comes to all questions relating to the mortgage industry. So today we were hoping you could just kind of walk us through what's involved. So I know you work with all different types of people, first-time home buyers, refinances, but for those people who might be interested in, buying their first home.
Sure. I mean,
you fit in.
Well, thank you very much for that kind introduction. I didn't know if I deserved that, but thank you. Yeah, it's really changed a lot the past 10 years. I mean, I've been doing this about 25 years, and it kind of ebbs and flows. When it's a buyer's market, it's like, how quickly can you get back to people? How quickly can you get a letter out to their realtor and help them do the negotiation? And then nowadays, it seems like it's a little bit more of a slow grind where you're trying to help people get their, best foot forward by preparing them for the different pillars of what they're going to have to deal with through the process. But I always tell people it doesn't matter if you're a first-time home buyer or a 10th-time home buyer. I'm going to treat you like a first-time home buyer, because there's so many changes that happen over the every 6 months or so. It seems like there's some new rule that comes up that we have to navigate and that sort of thing. But yeah, I can certainly touch base maybe through the eyes of a first-time home buyer if you guys think that would be beneficial.
Yeah, I think that would be helpful. I know a lot of people, it's been a while since I bought my first home, but I know that I had absolutely no idea what was going on. And we found a realtor because, that's what you do. But then it's like, oh, wait, I need money to buy this thing. So
I didn't know either. I worked in banking, and it was like our first home that we got. They don't prepare you for it. Even if you've gotten a car loan or student loan or anything like that, it seems like it's two pieces of paper. But then when you do a mortgage, oh my gosh, it becomes this personal, breakdown of everything: your credit, your work history. Oh, you had an address change 2 years ago. Explain that. There's so much that goes into it. And what I always tell people is, the information I give you is pretty universal. Probably about 95% of mortgage lenders have to adhere to the same rules, especially since 2010. So the big thing I tell people is it's kind of, there's three main pillars. The big things they're going to look at is your credit, your down payment, and your income. And then from there's about 26 variables or so that, figure out how much you can afford and what the banks say you can afford and, what you qualify for. It's I try to do it as a conversation with people, because sometimes people come to me and, they really overqualify, but then they're trying to, budget themselves down to what they're comfortable with. And other times it's a little bit more of a struggle. Maybe it's a credit issue, maybe it's a debt ratio issue, maybe it's a self-employed issue, which we've certainly heard that conversation. It becomes a little daunting. at that point. But it's, we try to adhere to what the client's needs are. And the first question I usually ask is more about, where do you see yourself? Where do you want to live? Because, to be cliche, at the end of the day, it's your house. It's the roof over your head. So it's like the ultimate personal purchase, right? If it's residential, we're not talking commercial or anything like that. It's, you got to live there. So, unless it's a vacation home or investment home, but those are a lot more rare. But yeah, I mean, if you'd like, we could kind of just go through like a basic process, because it's kind of like a 10-step thing. I can certainly talk all day about this too. I don't want to. I know the stoplight theory of conversation, or you don't want to go for more than 90 seconds because nobody's listening. So feel free to cut me off. I don't want to.
Yeah, I mean, maybe just from so somebody contacts you, like, what's the information they should have ready upon that first call, other than, hey, Chris, I want to have a mortgage. What do I do?
Yeah, excellent question. It's not like blood type or anything like that. It's
firstborn.
Yeah, basically, it's like we look at to look at the credit with name, date of birth, social security information, and just basically there's this rule of two. Lenders need to know where you've lived and where you've worked for the past 2 years. And then sometimes they need to go back further if it's like a grant program, or if maybe there's a little bit of history of bouncing around with employment or self-employment history. The first phone call, it's not, I don't need clients to call me up with like all their tax return information in front of them. Okay. If they have it, that's great, because we can start kind of to the next phase. But really, it's such a daunting process that I just like to have a conversation, 20, 30 minutes with somebody, find out what they're looking to do, get the basics. And then if a lender's doing their job right, we're not, Geico or whatever it is. You shouldn't get an answer in 15 minutes or less about what you borrow. 1% of my borrowers might be able to qualify in 10 minutes. But it's usually if a lender's doing their job right, you do a little bit of research and you get back to the people with some more questions. And then usually within about 24 hours, you have a really good roadmap.
Okay. Okay. So let's say somebody qualifies for whatever. What's the next step? Yeah.
So the first step would be the conversation, taking a look at the credit. That's usually the biggest piece. So when we do pull credit, usually I'll get back with the person and just kind of go over things, because I think the statistic is it's like 70% of credit reports have some kind of error on them. But a lot of times it's something that can be fixed, like it's a car loan showing up twice, or an old late payment that's already been negotiated off, or something like that. So I never take it for granted. So the first thing we'll do is review credit. And I usually do some kind of spreadsheet with just an idea of a maximum pre-qualification, because everybody wants to know what they qualify for. And I always tell people, if a lender told you what you qualify for, but you haven't picked out an idea of a home yet, then we're lying to you.
Oh.
Because the qualification is based on the total monthly payment, which is not just the money, not just borrowing the money, but it's also the taxes, the insurances. I mean, you guys might live in areas where there's a homeowners association fee. All of those things go into the debt ratio. So literally, I've had people that might qualify for a $300,000 townhouse, but a $150,000 condominium because of the heavy condo fee.
Mm-hmm.
The condos in the DC metro area have a $700-800 condo fee. So that comes into play. So we start with credit, then we go to figuring out how much you can borrow. And then that's where the real fun begins, where we start getting pay stubs, W-2s. And we have a secured system where people just upload that. Mm-hmm. Usually what people tell me, it's usually pretty easy. Most borrowers are W-2'd or salaried. We adjust those numbers, and then the fun begins. Nobody wants to deal with me. It's not fun. How much is my payment? I'm writing this big amount every month. The fun really starts when they get to look for the house, and that's kind of the next step.
So is it better? And I think I heard you say it's kind of better to have what you have in mind as far as what you want before you try to get qualified. Because I know a lot of times people are like, let me get this pre-qualification letter and then I'll start looking for a house. But is it better to have something in mind, or at least a price range maybe?
Yeah, I think so. I mean, it's everyone has their own personal preference. I have a lot of borrowers who are very, very black and white and just want, tell me what I'm supposed to be looking at before I even start looking.
Mhm.
But most of the time, let's face it, we all look at Zillow, we all look at whatever it is to see what's out there. People will kind of have an idea of what they want, have a few neighborhoods or cities picked out,
Right.
before they come to me. The challenge sometimes, not that we can't handle this or anything, but the challenge is sometimes I'll actually have, like, I've never talked to somebody and they call me up and I have a contract and, they need to close in 28 days.
Oh, okay.
That happens too sometimes. Yeah.
Okay. So if somebody has not so great credit, does that mean they don't get to have a house?
No,
Okay.
absolutely not. I've built a lot of my client base on with people that have maybe had some credit challenges.
Mhm.
And most of the time, we can take a look at that and give them some feedback based on the systems we use. So even though we're not quote unquote licensed credit counselors, we've been doing this for so long and we've seen what works and what doesn't work. And sometimes it's really obvious. I mean, as a consumer, you guys know, around the holidays, if you charge up the credit card bills, you'll see the automatic credit score thing go, go down. Wait, am I going the wrong way? Go down, 30, 40 points just because your balances are high on the credit cards. So a lot of times when I reach out to people, it's real simple. Oh, pay this down, pay that down, and we can get you a little bit better score to maybe qualify for a different program or get a little bit better rate. So yeah, and people that really have challenged credit, public records, bankruptcies, things like that, I'll never tell somebody to not start the process. If it's a lot of lenders, I think, are quick to hang up that phone if you don't have the 800 credit score and the, bunch of money to put down. But I've had a lot of folks with credit qualification issues, and sometimes they'll go to a place that can help them with that, but they can always start with us and we can kind of lead them in the right direction to fix that stuff.
Awesome. I guess then, so once everybody's qualified, they've picked out a house, they have a contract.
Then what?
Yeah, you work,
Yeah.
you work with realtors, right?
Yes, a lot. Mostly with realtors. Every now and then I have folks that are do a for sale by owner, or maybe they're buying like a house from a relative.
Okay.
But usually after the pre-qualification process or during the process, they let me know who their realtor is because it's real important that we work together.
Okay.
We'll send them out a letter letting them know they're pre-approved for a mortgage. And then once they do their shopping, once the contract comes in, that's when we really, the clock is ticking at that point. That's where, we'll tell the people, okay. And I always try to bug people as much as I can up front. And Lindsay, I know you take the same approach where it's, instead of piecemealing through the process, it's like, give me everything now.
Yes.
So I try to really bug people up front, get all their stuff in, know that the underwriting will be smooth. That way they can focus on the house and the inspections and showing their parents the place or showing their kids the place. But once we get a contract, we make sure we figure out what program works best for them. We lock that program, and then we start our process of like ordering an appraisal, the title work, all that sort of thing. So there's a lot that goes on behind the scenes, and people get bombarded with information, whether it be written information, stuff in the mail, calls from people that aren't really associated with the process. It's very frustrating. So I send people one piece of paper that says, here's the steps, and you can literally check it off as you go. But really the appraisal process, the underwriting process, all that stuff happens behind the scenes. It's just to get them to that settlement date, which is usually about 30 days out from when the contract comes in.
Okay. And then you work with the title companies and kind of everybody works together in the perfect world.
And it's great because everyone gets to pick who they want. And that's something I'm very big on. I'm very big on independence. I don't think you should be forced to use anyone. It's nice when people make recommendations because there's some accountability there, right? I mean, I tell people all the time, if their Uncle Bob refers them to me and I screw up, Uncle Bob's going to be mad at me and it's not good for me or my business. But yeah, we work with absolutely anyone, any realtor, any title company.
Okay.
We handle the loan.
Awesome. So what inspired you to get into mortgage lending and focus on this?
It was really just my own process of buying a house. I mean, when I worked at Chevy Chase, I was a manager, and I remember going to somebody who kind of does what I do now.
Mhm.
And, he kind of turned his screen around and was like, look, I have access to all this stuff. Whereas maybe a bank only has access to 20% of that. And I was fascinated by that. And the other part was, in the traditional banking world, a lot of times people come in, would ask for lending advice, mortgage lending advice. And it was always a handoff. It was always, oh, I'll take the app. And then I'd never see them.
Mm.
So we take the application. And if whoever back office person didn't call them, sometimes they'd come in a few days later and I'd look it up and go, oh, I'm sorry, that was denied, or that was, they're still working on it. So I wanted to be in a position where I could kind of control a little bit more than that from start to finish. So that kind of got me into this.
Awesome. What is one piece of advice that you wish more people understood about kind of this process or your industry?
Sure. That it's never too soon to start.
Okay.
You can, even if you're planning, as long as you're planning to stay in an area 3 to 5 years, that's kind of the minimum for any somewhat long-term investment, right? And if that's the case, there's a chance that you maybe qualify for more than you think.
Mm-hmm.
Or I've had it sometimes where people are just, they have good credit, everything's great, they feel like everything's A-okay, and then they come to us and, hey, there's an error on their credit report that just popped up, and now it's going to take 30 days to fix it. Mm-hmm. So it's never too soon. And then it's really about being comfortable. I mean, it's one of those things that, advice-wise, I'll tell people, work with people who make you comfortable, work with people who explain things to you. You don't have to settle or be pushed into any particular direction.
When it comes to investment properties, what do people need to think about when they're thinking about buying a second home or an investment property? Sure.
It's a similar process to buying a regular home, except the guidelines look at property disposition. They're looking at what, do you live there? Are you going to live there only part-time but not rent it out? Or is there any kind of money changing hands, in which case it would be a complete investment home? Mm-hmm. And the big thing is money. It's more money to put down, because it's funny, I priced one out the other day, and the rule is you have to have 20% down for an investment home.
Okay.
Whereas regular homes, I mean, there's some programs like VA and USDA that don't require down payment. There's 3.5% down, 3%, 5%. There's really low down payment programs. With an investment home, 20% is kind of the rule. But I priced one out, and we kind of found an anomaly where if you go from 20% to 25%, it was a much better situation, a better rate. But then if you went to 30% down, it was like almost as good as if it was owner occupied. Like there was this, the Fannie Mae and Freddie Mac kind of make a lot of these guidelines from their end. And basically, I guess that's their comfort zone. They figure if somebody's putting 30% down on a property, we don't care as much if it's an investment home. So that's the big thing, because before 2010, there were some programs where you could buy investment homes with less money down, but those are mostly gone. And any of them that are out there must be just horrific in rate. Yeah.
Great. Yeah. And I know you mentioned there are programs available. And I think a lot of people don't know about those. And that's one of the things that you will help them do, right? Is see if they qualify for any local programs, grant programs, first-time homebuyer programs. That's the lender's job. Yes.
Correct. And it's real important that we work together with the realtors on that too, because in a competitive market, certain programs, if you had a house to sell and you had 10 offers and, 9 of them were either cash or 50% down, it was, a 20-day close. And then one of them was somebody piggybacking with several loan products, or, something that would take twice the time and not be as likely to get approved. Well, as the seller of that house, you have the ability to pick which offer you want coming in. And I've seen I've seen sellers actually take offers that were slightly lower where there was cash involved over a higher offer that was like kind of a iffy loan situation, So it's the thing I love the most, though, if nothing else, remember this: lenders are paid. We're not paid based on rates and fees, so it's kind of a universal system. Even though we might not all be paid the exact flat rate, it's kind of like our job to find the best program. So it's not like I can say, oh, we'll do this program because it's going to put more money in certain person's pocket or something like that. And that's what I've liked ever since 2010. The playing field's kind of been leveled for that.
Nice. Okay. Then I think just one last question before we wrap it up. What is one item you can't live without in your day-to-day life?
Oh my God. Just probably texting. It's funny, right before this call, I had 3 texts two from a past clients and one from a current client, just going nuts. Doesn't matter. There's no age demographic. There's no background. It's everyone. It's 80-year-olds texting. It's 21-year-olds texting.
Yeah.
Seems to be the preferred method of communication. There's no way I could get around life without that.
Okay.
I thought I was going to say calculator or something.
I had no idea what I thought you were going to say, but that was awesome. Well, thank you so much. And I don't think we said Chris is with CBM Mortgage, and you guys are not one of the giant lenders. You guys are more of a small. And you're with Supreme Lending now. I'm sorry.
It's actually it's a combination. It's called CBM Team of Supreme Lending. Well, and yes, we are not one of the huge banks or one of the big conglomerates. We're kind of a mid-sized correspondent lender.
Okay.
So yeah, you kind of get the best of both worlds with that.
And that's one of the ways he's able to give that more personalized touch. And same with his boss. She's also awesome. So if you're looking for a lender, give Chris a call.
And we'll drop his contact information in the notes so you can reach out to him directly if you need to.
Appreciate it.
Well, thank you, Chris.
Thank you. Yeah. Great chatting with you.
Thanks for having me. I really appreciate it.